Biggest news that we're tracking at this hour, the Indian rupee is clocking in lows against the US dollar. Just yesterday, we saw a sharp 9-month low set in. Today, the rupee hit a record low of 68.86 to the dollar. Now, this has made the equity markets to see a decline as well as in the intraday trading session as well. We at Wion News find out what really triggers this depreciation of rupee against the dollar. Now, the rupee, remember, has plunged close to 3% since Donald Trump's victory. The foreign institutional investors or the FIIs have pulled out of bonds despite the bond rally on the back of 4% fall in yield differential between the American and Indian securities. That is the government securities and the bonds. The FII holdings in government and corporate bonds have dropped by $1.4 billion in November. $1.7 billion have been pulled out of the Indian equities by FIIs in the same period, which is November. The dollar index rally is almost close to a 14-year high. The expectation of an interest rate hike by the US Federal Reserve is another reason why the rupee has come under pressure as well. Now, this interest rate hike has strengthened the dollar quite to a fair bit. The US bond yields have seen a sharp increase, which leads to global investors to pull out of India and redirect these funds into US bonds, which fetch them a higher return on their investments. Now, this is just a global factor. There are multiple domestic factors that are also responsible for such volatility on this counter. Most brokerage reports have reduced their earnings estimates for the next quarter and even H2 FY17, which is the second half of this fiscal year. FIIs have reduced their exposure in equities and the debt market as well. The value of the portfolio for most investors, and especially FIIs, stands to be in jeopardy as FIIs now get lower return in dollar terms against the rupee. This also means that the demand curve of dollar rises further, weakening the rupee. The rupee essentially in the past 1 to 2 months, according to brokerage reports, has outperformed the other currencies of emerging markets as well. Hence, this kind of a fall is justified as experts feel that this could have been well overvalued to begin with. It has been observed that the RBI on the other hand, historically is known to intervene to curb volatility as well. If the weakness on the currency is in line with the momentum with the other weakening currencies, the RBI may not interfere much. The weakening rupee can also be a deterrent for the RBI to cut the repo rate. Now, earlier today, we spoke to Jayjeet Bhattacharya, partner of KPMG, on his outlook on this rupee depreciation that we're seeing in sharply in the Indian markets. Let's listen in to Jayjeet.
People who have parked their money in the Indian market would end up getting, net of all the currency rate fluctuations, they'll be getting a higher return in the US market than in India. If you look at typically returns in India, post-inflation in India, and inflation has been around 6 to 7%, the return has been about 1–1.5%, right? And clearly, therefore, if the same amount is invested in US, the investments will be, the returns will be higher on those investments. And that's how the Indian market is getting impacted, because FIs who have invested in India would like to now redeploy their funds, take them back to US and earn a higher return. And that's where you would see that the rupee rate is falling, because if dollars are being pulled out, then in the dollar versus rupee situation, the value of rupee will be going down.
There you go. That was Jayjeet Bhattacharya, partner in KPMG, giving his views on the depreciation that we're seeing on the Indian currency. Now we're joined by Dr.Suyash to explain the phenomenon that is bound to impact the rupee value in the coming months. Now, good evening, Suyash, and welcome to Wion Wallet. Let's start off by talking about the rupee inching closer to its all-time lows, and we saw a record low being clocked in today in trade as well. What are the concerns that are really plaguing the Indian currency? What are the foreign cues that are weighing this down in terms of the strengthening of the dollar and, of course, the domestic cues as well that you're picking?
If we see, it's not just Indian currency, it's also a basket of currencies which are falling, and there are a couple of reasons for that. It's not just Trump victory. One of them is Trump victory and the global exodus of dollar, and also US, as Chaiti in the last 2 weeks back we had discussion on Fed rate hike. It's almost imminent that US Fed is going to increase the rates, and that will also have a major impact on global economy. So all markets, wherever dollar had flown, is it's going back to US, and this is also seen in the dollar index getting strengthened.
Now,
and also there is one very significant thing which has happened in the near time. So 3 years back, if you remember, in 2013, where we had a massive crash in rupee from 52 to 68, the RBI had resorted to raising money from NRIs. And this time around, it's the maturity time where almost 24 billion US dollars worth of money is to be paid back. And knowing the current demonetization and a lot of other things that are happening, I mean, the RBI definitely is going to work overtime to fulfill all these things, and this also has a major impact on our currency.
Now, there are two things that I picked up from our conversation that you just mentioned. One is that the other currencies of the emerging markets are also seeing a fair bit of depreciation set in. The other thing you mentioned was about the RBI. I'm going to come to the RBI and the monetary policy later, where we will discuss the this depreciation probably being a deterrent to the repo rate cut as well. But before that, we are seeing the Chinese yuan falling as well. Now, we have seen it depreciating recently, and do you think if it falls a little more, then it really would not be a surprise to see the rupee depreciating from this level as well? I mean, 68.86 has been a record low. Do you think rupee can really respect this kind of a level at this point of time?
So the fall could be further, but we can't expect it to go beyond 69. 69 is a level that has been expected. I don't think so it would fall beyond that. But as of now, I think the level that is expected is somewhere around 66 to 69. I don't think so it would fall anywhere below that.
Do you think the RBI cutting the interest rates will probably make the rupee a lot weaker? Because there would be an outflow of currency as well. And where do you think the RBI's interest rate regime really stands on the back of the rupee depreciating really? And what kind of a repo or a reverse repo rate cut are you expecting in the near term?
Correct. So the interest rate also has a major impact, because from April last year, from 7.5, we have currently the 10-year Indian bond yield is at 6.2%. So that's a massive change in rate, and this has also caused a lot of investors to pull back money and take it back to the emerging market to US economy, and interest rate, Indian bond yield is a major one of the major factor, because 100 basis point you wouldn't find so much of change any time in any economy. But as I said, there are a lot of things expected. In fact, this rate which is appreciated would also go further because of demonetization. As the fiscal improves, the RBI has more room to I mean, the bond yields are expected to fall further, and which is also spread some kind of a scare amongst the investors, and which is one of the reason why I think it's almost 3.4 billion US dollar which has gone out of India since the Trump victory, both from debt as well as the equity market. So yeah.
So now, I'm just taking a look at a couple of research reports that have come in today from a lot of brokerage houses as well, and they are mentioning that the rupee has in the recent past 1 or 2 months outperformed the other currencies as well. So somewhere do you think that the rupee was overvalued and it's seeing the right kind of level that it should be seeing, or are you in disagreement with these reports?
So that's correct. For almost 3 to 4 weeks, you would see that in last one quarter you would have seen where all emerging markets were falling, rupee was the only one standing tall. And I think now it's the time for the Indian rupee to react to this, all the global cues that are there. And it's not just Indian rupee, all other currencies are falling. But we have more to do with, one that we did not react in the past. So we are reacting now more aggressively, and the rupee is falling much more faster than others. And second, it's a global phenomena. So there's no option. We have to go with the tide.
You know, the foreign institutional investors, from what we're picking up, have pulled out of the bonds despite the bond rally on the back of 4% fall in the yield differential that we're seeing between the American and the Indian government securities and bonds. Could you throw some light on how the FII holdings in government and corporate bonds have dropped by $1.4 billion in November, and how this is also impacting the rupee and strengthening the dollar as well?
I'm sorry, I didn't get that.
The foreign FIIs, from what we're picking up, have pulled out of bonds, and this is despite the bond rally on the back of the 4% fall in the yield differential between the American and the Indian government securities. And the holdings of FIIs in government and corporate bonds have dropped by $1.4 billion in November, is what we've picked up, and $1.7 billion have been pulled out of Indian equities alone by these FIIs in the same period. And alongside that, the dollar index rally is almost close to a 14-year high. So do you think these are the global factors that are ogering down badly on the rupee as well?
True. As you rightly said, about the dollar index, it's also a lead sign. Since the subprime crisis, we have seen the US Fed being very liberal in terms of unleashing or printing the US dollar in the form of quantitative easing and spreading it around the world, and all this cheap capital was flowing all around the world, and US investors were also looking at emerging markets where you could get a better yield. But now as things are improving there, and you're seeing a recovery in the US market, it's a very good reason for these investors to take the money back home, where it is much more safer and there are no risk involved, especially from a currency fluctuation point of view or economy point of view. And if you remember, there is a very popular term called as BRIC, that is Brazil, Russia, India, and China. And
right.
If we've seen last 8 years, all these four economies, out of these four, Brazil has got a junk status in June. Russia has its own set of problems with oil prices falling. China has its own internal problem, and the only one standing tall is India, and we are facing the music now.
Now, coming back to the Indian cues that may be auguring down badly for the equities as well, most brokerage reports have really cut down on the earnings estimate for Q3, and also H2 FY17 as well is something that we're picking up from most of these brokerage houses. There is a, conspicuous slowdown in the economy that we are witnessing on the back of demonetization as well. Now, will this augur down very badly for the rupee, and do you see it going below 70 to the dollar as well?
So that's true. So even if you see, so I'm not too sure whether it's the demonetization, but it's also most of the experts have done the calculation or more on the GST front, because nobody knew about demonetization 2 or 3 weeks back. But due to GST implementation, it's a very likely thing that there would be a as we said, rather than the economy expanding, it may see a temporary contraction because of higher rates in certain category, and which also indicates that you don't have a growth in economy for coming 2 to 3 quarters, based on what they knew 3 weeks back. But now, adding the demonetization, I think we are definitely going ahead for a slowdown in the economy in the coming quarters, and which will put additional pressure on the currency.
Now, do you think the FIIs will further sell from the Indian equities in the bond market with the rupee depreciating, or do you think that bearish momentum has stopped and they would not continue with that any further going forward?
So it's see, theoretically it's so if I have $1 equals to say 69 rupees, if every FII would love to come and invest in the economy because he's getting more money for the same dollar. But it's also a sign that your economy is weakening. So for the existing investor, every rupee fall that you have, it's an erosion in their profit. So it also sets a kind of panic in their mind when and they would like to take the money back out of the system. For new investors, if they may come and invest in the market, but looking at the way things are going and the especially the Trump phenomena and the first speech that he made, and he said that the agreements he's going to have a look at it, and so things are going to be for sure. America is going to look more stronger, and it's going to rely more on itself, and any investor who was shying away from investing in America would now want to take the money back home, because that's the place where activity is going to begin. So we can see this accelerate further.
All right, thank you, Dr. Suyash Bhatt, on that note, for joining us on that quick update and your viewpoints on the depreciation of the Indian rupee.